What is up, everybody? Welcome back to Bitcoin and Markets. Happy Friday out there. Hope you guys had a great week. Let's finish it up here by talking some Freeform Friday on the live stream. I have a few topics here to get into. Bitcoin is a little bit slow here these days, but I have some macro stuff to talk about. And also something for Bitcoin is the UTXOracle. I read that this morning and I read about that this morning. And some of the guys on Telegram, they were like, oh, we've known about this for several weeks. You know, that Guy Swan talked about it on his podcast and stuff. Okay, well, I don't listen to a lot of Bitcoin podcasts anymore, but I just found it this morning, read through it, and I thought it was brilliant. So we'll cover that a little bit. Talk about the price. Talk a little bit about copper. And maybe look at some charts, copper charts, oil charts, maybe dollar charts. We'll whiz through all of that stuff. But let me share my screen. All right. So bitcoinandmarkets.com. This is where all my stuff goes out. I did write a Proton. It's my new formatted Market Pro, which is shorter and more to the point, and I put them out multiple times a week. You can see I put one out, I think it was Tuesday, talking about 2022 cycles, and then talked about Dr. Copper today. Maybe I'll even release one on the weekend. I like those shorter formats because I can crank them out. Some of them were getting to be 4,000 words long, and I know people probably don't want to read that, but they will read 800 words. So I think this provides more value actually in the shorter format. And some of my longer format out to about 1,200 to 1,000 words. Those are going to go onto the Bitcoin Magazine Pro. And let me share that. So this is bmpro.substack.com. I'm writing for them now, so check that out. My latest was this Wednesday, dollar wrecking ball, good or bad for Bitcoin. Talk Bitcoin, obviously the dollar, and FOMC. So this came out before the FOMC. Talk about what I thought was going to happen on Wednesday and what I expect to happen for the next 6 months to a year. And what does that mean for Bitcoin? And I look specifically at Fed futures and stuff like Fed funds futures, and, very specific markets that are trying to predict this. I mean, some of the most liquid markets in the world try to predict this. And a lot of people think they know better than the market. The market usually does miss flash crashes and stuff like that, obviously, but overall, that should be your base case, especially if 2 or 3 or 4 of the largest markets in the world are telling you the same thing. That should at least be your base case, and you shouldn't try to, think too hard around that. You should be like, why is it going to be priced like this? Why, what can be some black swans? Anyway, that's the type of content you get here, and that you're going to get now on Bitcoin Magazine Pro, so check that out. Okay, let's actually go into the charts first. So this is Bitcoin. Did break out from this downtrend, kind of did a back test. Looks like maybe a second back test. I mean, we're holding these levels for now. We will see how this goes. I'll share this with Telegram because you guys, as I say, don't have eyes. I should just share my screen over there, but then you can see where I'm flicking back and forth, and it's probably distracting because I can only share my screen. I can't share an individual tab like I can for the streaming software. Anyways, okay, that's Bitcoin. Let's bring up the moving averages as well. So we kind of got rejected off that 50-day moving average, which I was surprised at. I thought we were going to make it up to the 200-day and try to break through there. But we have failed to break through the death cross, which is a possibility that I did point out. So for this whole period, let me get a big arrow. Oh, that's not what I'm looking for. Okay, so for this whole period, I'm talking about a date with 25,000. And we ended up getting down there to 25,000 on the 11th. And then I talked about this death cross and a rally up into the death cross. That kind of happened. I mean, it was a little bit late, but I thought we could bust right through that like we have done multiple other times this year and in previous cycles, like in 2019, that cycle, we did this exact same thing, but we have failed to do that. So that does show weakness in the Bitcoin price, in the Bitcoin kind of bull market momentum. I'm going to share those moving averages with Telegram. All right. We look at the weekly, staying above the 50 week, which is important in my opinion, but we can't quite break back above that 200 week. So we will see. The 50 week is positive sloping, and that's about a 1 year moving average, right? 50 weeks versus 52 weeks or 365 days, whatever. So that is a very important level in Bitcoin's history and in the market in general. The 50-week moving average, we have maintained that so far. I think that's very important to maintain. If we break that, right now it's sitting at 24,400. If we break down below that for some odd reason, that is very bearish. We'd have to start looking at lower levels and also reevaluating our cycle talk, the 4-year cycle, or even a mini 2-year cycle, or whatever. I've talked about that in the past. Whatever we are looking at, a drop below the 50-week moving average in the next few weeks would be extremely detrimental. It would be extremely disruptive to the overall cycles of Bitcoin, the overall market structure. So that would not be good. All right, so that's Bitcoin. Let's take a look at, what did I talk about? Copper. So let's go in here and bring up copper. And I'll take these off. And yeah, weekly will be fine. I'm going to zoom out here. And you can see all the way back to after the Great Financial Crisis. Share that over with Telegram. And so kind of like gold, gold topped in 2011 after the Great Financial Crisis. And that also happened with copper. Copper topped in January of 2011, and it's just went down. And back in this time, when gold was spiking and we just started QE in the United States. I mean, they'd started QE in Japan, I believe, back in 2006. But and it didn't lead to runaway inflation in Japan either. But when QE was starting in the United States, everyone was like, oh, this is going to be so inflationary, blah, blah, blah. And I believed it. That's the camp I was in. I was a gold bug. I thought it was time. This is before I found Bitcoin. But then when it did top in 2011 and rolled over and crashed, yet we were doing more and more QE 1, 2, 3, 11, a million. And inflation didn't kick up, and copper kept going down and gold kept going down. Then I, reached out and looked around and found Bitcoin. Bitcoin seemed to be the active participant. I thought still at that time that people were manipulating gold, and that gold would, it succumbed to the JP Morgans and all that stuff manipulating the gold price. And I thought Bitcoin was more active versus passive. Anyway, then years and years go by, still no inflation, still no big, destruction of the dollar. And I start questioning my assumptions again, come to the deflationary theory, and that's where I'm at. And I think it makes a lot of sense. I think I finally grasp, after being involved with economics, getting my degree back around the year 2000 and following it all up to now, I finally think that I have a good grasp on the current system, on Bitcoin, and where we're going in the future. So anyway, Dr. Copper. So it sold off and barely made new marginal highs here, in the COVID era. But that was mainly due, I think, to China hoarding copper. They went on a big copper buying spree and hoarded a ton of copper back in 2020, 2021. And that popped that price up above the Great Financial Crisis top, which didn't happen with other commodities. Oil didn't do that. Let me bring up oil. And I have this. Let me switch to regular here, and I will take off all that. So with oil, let's go to a monthly chart. So you can see great financial crisis was up here at 147, and this COVID crisis plus Russia got us only to 130. Not an all-time high, but copper did make an all-time high, just barely. So let's go back to copper. Go to the weekly. What happened to my arrows? Oh, I turned them off. Okay. So when we talk in relation to reacceleration of CPI, it pretty much means that we have to have booming, the economy needs to be booming. And we just don't see that with copper. We actually see copper following the exact same trajectory as post the previous peak. I compare it, to February of 2013 before we just started this big downtrend. And we'll probably do that as well, especially if the global economy is going into recession, with China having a hard time, Europe having a hard time. It's just not likely that we're going to see, any turnaround in big demand for copper or demand for oil. That goes a lot into my peak oil demand. I think we've had peak oil demand, and we're going into a recession that we're going to see hit I think the East Asian economy is very hard. We're starting to see Japan have troubles too. But China is the big player on the block that I think is going to get taken down a peg. All right, so that is copper. Let's take a look at the 10-year, because that has been booming. Oh, let me share copper with Telegram. Sorry, guys. Got to take a snapshot of that. If you guys want to join the community over on Telegram, where we talk I did share that, damn. Where we talk all day long about macro, about Bitcoin, share ideas back and forth. Check out t.me/Bitcoin and markets. I'm streaming on YouTube, Rumble, and Twitter. Like, subscribe, follow, whatever. Make a comment down below, and I will go back and answer all the questions that are in the comments underneath this video afterwards. So, all right, Bitcoin. We covered that. What were we going to? The 10-year. So the 10-year is kind of shooting up, but I don't like this, because remember, the interest rate fallacy is that rates go up when money is loose, and we don't see money loose anywhere. I was just watching some videos on Twitter where this guy's like, no, money is tight everywhere in the economy. Car repos are going through the roof. Nobody's buying houses right now. The volume is extremely low. Nobody can get a loan. Banks aren't giving loans. Money is getting extremely tight. So what explains this, the 10-year going up like this? Well, I think it is a rush for cash. The Chinese and even the Europeans are at their wits' end trying to get dollars to pay dollar-denominated debts. Country Garden, which is the big Chinese real estate giant, I think it's like 5 times bigger than, what was it called? Evergrande. They're missing payments now. They can't even make like a $10 million coupon payment on some of their bonds. And they're a multi-billion-dollar company, like $100 billion company. Country Garden's going down. They're panicking, selling anything they can to get dollars to pay their dollar-denominated debts. And I think that is what's pushing this higher. Okay, the dollar wrecking ball. And I did talk about that as well as on BM Pro. So we have the dollar here. And I think it's the 10th week. 1, 2, 3, 4, 5, 6, 7, 9, 10. Yeah, this is the 10th week in a row that it's going to be green. It's just going up incessantly, despite people, calling for the death of the dollar, calling for hyperinflation, or whatever the case is. The dollar continues to go up, and it looks like it's breaking out to new highs here, or new swing highs, at least for the year. Not good. Let's look at the Chinese yuan. Pushing up also against its highs right at 730, continuing to go higher. This is the stress in the system that's forcing them to sell their treasuries to get dollars to pay debt, pushing up the dollar, and also putting a few little breaks here on Bitcoin. But I don't think it's going to overall affect Bitcoin in the cycle. But we will see. Like I said, if it can't hold that 50-day or 50-week moving average, we're going to have to all have a come to Jesus moment here about Bitcoin. All right, where are we going next? Okay, let's go to this. This is Lay's Real Talk. If you guys aren't subscribed on YouTube, I recommend subscribing to her channel. She does, I mean, some of the stuff I personally, I think some of the stuff she goes down is a little bit more conspiratorial, but she is, very well researched. She researches every video for several hours before she comes on, and she tries to be as accurate as possible. She does know the culture. She knows the people over there in China, and most of her content here is about the CCP, but she had this one that just came out today of amid internal chaos has Beijing challenged its strategy to take over Taiwan. And she talked about all of the recent cleaning house of what Xi has done with the military. It's crazy how many positions he's moved around. And so I shared that with Telegram today, but then I ran across this article as well out of Bloomberg. And the headline is Xi's purge of handpicked ministers shatters stability image. Now, one of my big macroeconomic or even geopolitical calls of the last 2 to 3 years has been the decline of China. Now, this is very similar to Peter Zion, but he goes like, this is the end of China, and very, very dramatic when he sells this. I don't think that's necessarily the case. I think China can recover. They can turn into Japan 2.0. But the problem with that is the communists, Xi Jinping. As long as they have Xi Jinping here in China, in charge, in power, they're not going to turn into Japan 2.0. They're going to turn into North Korea 2.0. So there's got to be powerful. Everyone is coming to this realization. I mean, just in the last month, so many people have shifted gears on this China call. They've gone from the Thucydides trap that China will be able to turn it around. They're brilliant communists instead of like the Soviets that were dumb communists. These guys are brilliant. Just look how high the IQs are over in China. They can solve any problem. I mean, that's what the prevailing wisdom was just a few weeks ago, up to a few weeks ago. And that's what I've been pushing back for a long time against. Now it's like a U-turn, a 180. Everybody's thinking China is going to collapse. I mean, we have to have a little bit of, I mean, it's not either they're going to be okay, they're going to be the Chinese century, or they're going to collapse. There's got to be some nuance in here, right? But this headline struck me because it shatters the stability image, or the image of stability of the CCP, because I think that there is a much better chance of a revolution in China than people think. And I've said that they have to get rid of the CCP. And on FedWatch, probably a year and a half ago with CK, and I'm talking about, they have a shot. They need to get rid of the CCP. That's the only way that they can turn into Japan 2.0. And it's possible by Xi constantly purging, constantly cleaning house. It's showing that there is dissent amongst the top brass. Now, whether they just get rid of Xi and then they step into power, someone else steps into power, or whatever, but it shows that it's not as stable over there. And even mainstream media, Bloomberg, is talking about this. I mean, this headline no way would it be printed 2 years ago. All right, let's read into this article a little bit. So after President Xi Jinping tore up the Communist Party rule book to promote key loyalists last year, some observers expected his new team to operate more smoothly in tackling China's biggest challenges. Instead, his government looks like it's in disarray. Xi's mysterious purge of his foreign minister in July, followed by the reported ouster of his defense chief less than 2 months later, is making China appear unstable to the outside world. The Chinese leader also overhauled the generals overseeing China's rocket force, which manages the nation's nuclear arsenal, without giving an explanation. And those are just the firings that have been made public. There's another one that was made public, was the PBOC chief was canned, replaced with a Forex expert that ran their Forex desk. That program is SAFE, SAFE. I don't know what the acronym stands for, but that was their FX desk. That guy was promoted to top of the PBOC, and the guy at the top of the PBOC that was just reinstated months earlier at the party Congress was canned, put in with this guy. They're panicked about their credit markets. They're panicked about their currency. They're panicked about their military. Look, he's firing all top generals. There's something happening over here. And that's what Lei walked through. So I recommend watching her channel. Okay, so that's all I have to say about China. We'll see. I think they're closer to a revolution or closer to some sort of breakup or ouster over there. But we will see how that goes. Next topic. Right here. Next topic, also out of Bloomberg. Headline is Treasury buyback plan will boost market resilience, U.S. debt officials say. So the resilience of the world's biggest bond market is top priority as U.S. debt officials prepare to start buying back government debt, according to Josh Frost, the Treasury Department's Assistant Secretary of Financial Markets. Quote, buybacks can play an important role in helping to make the Treasury market more liquid and resilient, Frost said Thursday in a prepared speech. Our goal is to, quote, ensure that the Treasury market remains the deepest and most liquid market in the world, which it is. The Treasury is expected in 2024 to start regularly purchasing its bonds for the first time in more than 2 decades. So it sounds like they will be retiring debt, right? They will buy back those outstanding bonds. And what people think is that's going to push money out into the economy. But first off, the government borrows money. It takes money out of savings and it puts it in its Treasury general account and it spends that out into the economy. So that by itself is pulling demand forward, from the future into the present. And if they are buying back those bonds, that's not necessarily going to be quote unquote inflationary, because that money might go back into savings. Why would it, go out into buying pizza and all that stuff? No, they're probably going to take that and put that back into long-term savings somehow, and either buy more bills, more treasuries, have a bigger bid for other securities, government securities. But it's probably not going to go out into some sort of inflationary fire. But let's continue. A move that comes after years of increasing scrutiny on Wall Street about the $25 trillion market's underlying fragility. The programs have 2 separate objectives: to bolster liquidity in some pockets of the market and to smooth the volatility of bill issuance as it manages its cash balance. Officials have been exploring the buybacks for at least a year and unveiled additional details on the structure last month. But market liquidity has drawn scrutiny since at least October 2014, when treasuries convulsed with no apparent trigger in what was dubbed a flash rally. Some measures pushed through since 2014 include boosting public reporting on daily Treasury transactions. More importantly, a near freeze of the market in March of 2020 forced the Federal Reserve into massive purchases to prevent wider financial disruptions. That shock and other disruptions have led various regulators to seek improvements through an interagency working group. Frost said Treasury's liquidity-focused buybacks were not intended to address periods of acute market stress. Interesting. Were not intended. I think that's exactly what they're intended to do. Prevent periods of acute market stress. That's probably what they, are getting around that. It's meant to address these periods by preventing them. A responsibility that falls under the Fed's mandate to ensure financial market stability. Instead, dealers should feel the bump from buybacks in their intermediation capacity in normal times, as well as when there's outsized trading activity, said Frost, who spoke at an event, blah, blah, blah. The department intends to be more price sensitive as it chooses the buyback offers to accept, and therefore may end up purchasing materially less than the maximum, he said. Quote, buybacks can help improve the liquidity of the Treasury market by providing a regular opportunity for market participants to sell back to Treasury off-the-run securities across the yield curve. Off-the-run securities. So what does that mean? Well, I'm not an expert in this, but I do know the basic difference between off-the-run and on-the-run. So on-the-run means freshly minted securities that you buy at auction, like within the last week or two or month. The very last 10-year auction, and you bought that 3 weeks ago, that's on the run. But if that 10-year bond has been out there for 5 years, it's off the run. And they become the liquidity characteristics go down over time. The most pristine and liquid there is the Treasury bill. That's very liquid, always on the run, basically, never off the run. And when we had things like the repo rumble in 2019, September of 2019, we had the COVID crash. We even had the great financial crisis, the big days of sell-offs in the great financial crisis. What happens is these off-the-run securities that they're talking about here, so these stale 10, 20, 30-year bonds, even 5-year, stale 5 years, they go bidless. They go bidless. The only thing the market wants is like 4, maybe 8-week Treasury bills in these acute market failures or market stress events. Acute market stress. There's no such thing as a market failure. Acute market stress event. These off-the-run securities go bidless, guys. That means their price goes to zero. You cannot move them. The market freezes. And that's bad because it slowly moves towards the rest of it. What does a bank that they only want on the run, and they'll have bids for on the run, but then the asks dry up for on the run. So if off the run goes bidless, on the run goes askless. Nobody wants to exchange their 4-week Treasury bill, and the entire market freezes. That is what they're scared of. Okay, so what they're trying to do here with these buybacks, people will think it's inflationary, but what they're doing is it's kind of like an Operation Twist in a way. It's going to make sure that there's some bid out there for these off-the-run securities, that they'll never go bidless. And then they're going to allow these market players, these primary dealers, whoever they are, be able to Operation Twist them into on the run to increase their liquidity. So it's a savvy trick. It's a maturity risk trick. It's not a money printing trick. So anyway, I hope that was helpful for you guys to understand this buyback thing. Let's go into the last story of the day. Is this UTXOracle a decentralized approach to the Oracle problem using the UTXO set to calculate a Bitcoin price. And when I first read that, oh man, that sounds a little fishy, right? How are they doing this? Because they bill it as, oh, no trusted third parties. You can get an approximation of price just by the information on the blocks for that day, which is very interesting. But here we go. Let's dive into it. This is from Daniel Hinton and Steve Jeffries 1 day ago. All right. I thought it was a couple weeks old, but maybe just the talk of it was. But all right, let's look at this. We now know how to infer the daily price of Bitcoin within 1% by looking at the unspent transaction output set, the UTXO set. With this, we can build decentralized applications that rely on the UTXO set rather than on trusted third-party oracles. So there is an Oracle problem. And man, it has been years since I talked about the Oracle problem. Let me whip out the Bitcoin dictionary. You guys can check this out, bitcoindictionary.cc. Put this out several years ago in 2020, actually, COVID era. I think I have Oracle problem in here. Let me Oracle problem. Here we go. Bam, right from the Bitcoin dictionary. Let me read this out. The ability to provide trustless external data to a smart contract. Discussion. Smart contracts have no trustless source of data about the external world. So only information from within the network is available for trustless execution. Examples of trustless information available for smart contracts are a balance existing at a specific address, a difference in block number between events, or presence of specific signatures in a transaction. So like multi-sig is a smart contract, time lock, verify is a smart contract, those types of things. Very simple smart contracts. And you do use oracles, but it's oracles from within the network, okay? But there is an Oracle problem for external data. You can't trust these. Let's continue from the Bitcoin dictionary. Many touted uses of smart contracts for dApps and other applications rely on more expressive data, which must come from an external oracle. Examples of this type of data include market prices, which this right here, UTXOracle, is talking about how to get market price solving the oracle problem. Other types of data include binary event outcomes. So if the Jags beat the Dolphins in football and the score, like that type of information has to come from external, and there's no way to make that trustless, right? So binary event outcomes, voting results, or whether tangible property transferred ownership. The Oracle problem arises when trying to validate the authenticity and correctness of the data. In an attempt to solve the Oracle problem, developers add layers of complexity, but cannot change the simple fact trust is needed for external data. Since the value proposition of a smart contract is trust-minimized execution, if it relies on an oracle, decentralization is lost along with the value proposition. There you go. So that is the Oracle problem from the Bitcoin dictionary. And they have pretty much solved this for market price. So let's dive into this a little bit deeper here. Actually, I'm just going to go down here to this image if they load. Come on, load, guys. Why aren't you loading? Sorry. If you guys are aware, I was supposed to be with Mark Moss yesterday, do a recording, and my computer completely bricked. So my computer is a piece of crap. I might be doing a fundraiser to get a new computer. But now, why aren't these damn images coming up? This is frustrating the hell out of me. Okay. Let's just read some of this. In this article, we'll explore a new way of interpreting the Bitcoin UTXO set that accurately reflects a Bitcoin price at each block height and has the potential to serve as the foundation for a new era of trust-minimized, decentralized finance on Bitcoin. What trust-minimized tools could you build if you could calculate an accurate price for Bitcoin at each block height using only your Bitcoin full node and an open source model? And then they have a bunch of cool things like peer-to-peer marketplaces. Yeah, automatic execution, all sorts of things. I mean, that's huge. That opens up a brand new avenue for smart contracts on Bitcoin that don't have to use just block height, like I said, or what were the other things like transactions, multi-sig. This is a whole new thing that can open up a bunch of, I mean, it's risky because it is vulnerable to different types of attacks, but it's exciting. Okay. I wish these damn pictures would come up. What I'm going to do is search Twitter real quick for UTXO set, UTXOracle image. And share this. All right. So this is, you can follow them on Twitter, UTXOracle. And this is the complete UTXO set of the entire Bitcoin blockchain. And it looks kind of like a heat map of something, but you can start looking in here and seeing some other lines. You have some horizontal lines and you have some wavy lines. That's what they call it. All right. But if you zoom in, you can start to see a little bit different picture. Now, here is something. I don't know exactly if this is, this image is 2 years of on-chain outputs. So you definitely see these horizontals and the waves. Now, what they do here is, again, I'm no expert, but what they do here is they provide a algorithm to this, and they say, okay, these horizontal lines are obviously at a Bitcoin amount. So on the left-hand axis, you have Bitcoin amount, 0.1, 0.01, 0.001. Those correspond with these horizontal lines because it makes sense. People will send around flat amounts of Bitcoin. 1 Bitcoin equals 1 Bitcoin. That's what all the horizontal lines come from. The wavy lines come from a round dollar price, which I think is fascinating. So people send their, instead of making a 0.01 Bitcoin transaction, they'll make a $1,000 transaction. And they tend to correlate around these wavy lines are those size of transactions in dollar value. So if you break it down by the block, you can actually get a very accurate price. I mean, this is very, very fascinating to me. And it opens up a lot of room for smart contracts. But anyway, okay, that's going to be it for today, guys. I appreciate you hanging out with me. Ansel Lindner, Bitcoin and Markets. Let me share the homepage again. Check out bitcoinandmarkets.com. You can also check out bmpro.substack.com for my writing with Bitcoin Magazine Pro. Check out the YouTube and the Rumble. Like, comment, subscribe, make a comment down below question, and I'll answer it after this. And check out the Telegram, t.me/Bitcoin and Markets. All right, guys. See you on the next one. Bye.